Right, so what's happening in savings at the start of June 2025? I'm going to take you through some news and some new products that's worth knowing about. Amelia will take you through the top rates right now. So let's kick off with a story which we covered earlier this year when there was a lot of speculation around it. And it seems to have reared its head again. I've seen newspapers covering it. I've seen YouTubers covering it. I've seen podcasters covering it, all talking about it, all these kind of clickbaity, grabby headlines and titles. This is the ISA reform. What's going on, particularly with cash ISAs? It's come back. Now, you might remember earlier in the year, in the head up to the spring statement, which wasn't a budget, it was just a spring statement, there were rumours about axing the cash ISA allowance or reducing it, or all sorts of things were being talked about. Then it's all right, nothing happened. But what we did have in the spring statement was a note that said there will be a consultation on ISAs. They'll be looking into it. They'd already got one going on lifetime ISAs, but broader ISAs, they'll be looking into it. Now, it's been revealed by the Financial Times that the Treasury is looking to start this in July. So just a few weeks away now, next month. We don't know anything more about it, exactly what this consultation will look like, what this review will look like in ISAs, but it is coming. The only other thing that we know is that Rachel Reeves, the Chancellor, was on the BBC, and she said explicitly that she was going to be keeping that £20,000 annual ISA allowance. That was not going to go anywhere. Now, that sounds like good news, right? I mean, it is. In reality, most people don't have 20 grand of new money to go into an ISA each year. It's incredibly generous as it is. So even if it had been cut, it only would have been a few people, a handful of people who would have lost out in this way in terms of new money going in. But that's staying. That 20,000 overall allowance, that said, that is going to stay. And obviously things can change, but that's what she said right now. But what it didn't rule out saying this was changes elsewhere, particularly changes, as rumoured earlier this year, to that cash ISA allowance. And in fact, in that same interview, Reeves said that a lot of money is put into cash or bonds when it could be invested in equities in stock markets and earn a better return for people. So it still seems that rhetoric that we saw earlier this year being leaked in different areas, this sort of sense that the Treasury is looking to push people out of cash ISA savings into investments is something they are absolutely trying to do, which could mean that proposed by people in the kind of investing industry, the big banking industry, suggesting this apparently, that we could see a cash ISA limit reduction, potentially to that £4,000 that was spoken about before. But again, it's all speculation right now. We don't know. When this review is announced, they'll be looking into it. There'll be findings that come out of that. And I would imagine we won't know anything for certain until the budget, which normally takes place sort of September, October time, maybe into November, that says what they'll be doing. And then those changes, I imagine, will then come into play the next financial year, so April the 6th of 2026. So for now, there's nothing to worry about. There's nothing you can do. It would kind of make sense maybe if you are able to use your cash ISA allowance this year, because obviously if it does get reduced next year, it doesn't matter if you put it in already in this year, it will be protected, it'll be safe. It'd just be future years where it would be reduced. If you can put money in this year, it's worth doing it. And again, over at becleverwithyourcash.com/ISAs, we do have rounds up of the best ISA accounts and the best stocks and shares ISA platforms as well. And obviously, Amelia will tell you the top rated ones in a moment. Now, you guys obviously know that last month, the Bank of England cut the base rate. It fell by 0.25 percentage points. As a result, we have seen a big drops in those top paying accounts across the board, pretty much. Still some competition going on in some places trying to sort of get your money. Still some competitive rates out there, particularly around those regular savers, though, as I always say to you guys, they could change at any time. They could decide we're going to reduce those ones. And one of those has been announced already, actually. Now, this was a variable rate one, so even if you already have this, you will see this lower rate as of the start of June. This is NatWest and RBS. They both offer something called the Digital Regular Saver. I'm a big fan of this. Has been paying 6.17%. Now it will be 5.5%. So still pretty good, still pretty generous. But obviously that is a lower rate than you would have been getting before. Now, what's interesting about this one, although you can still get ones around 6%, 6.25%, 7%, 7.5% out there, and some of those are fixed, so certainly be looking at those in the first instance. What's really interesting about the NatWest and RBS one is that although the limit you can put in every month is 150 quid, it doesn't end after 12 months, which is what happens with a lot of these regular savers. You can keep saving in it, and you keep earning that high rate of interest until you reach £5,000. So, and again, you can have one with both banks if you want, one with NatWest and one with RBS. So you could always fill one up and then start on the other one. But that's quite good because that means even if the rate has been cut down slightly, and if it is maybe slightly lower than what you might get elsewhere, it will continue year after year after year after year. So then it can actually become quite lucrative. Once you've got that £5,000 in there, being able to get now 5.5%, with other rates likely to fall down below that, that will be really competitive. So certainly something to be considering there if you haven't already got it. But again, another one of those cuts that has come along. There is a boost that's happening that some of you might have seen. This came out just too late for our last update to share with you. And this is around Chase. So you probably, if you are a Chase customer, you probably have already seen this. This is a 1.8% bonus for 6 months on a new savings account. So within the app, you would open up a new savings account, particularly to trigger this bonus on that particular pot. Now that was advertised when it first launched at 4.8%. So you get 4.8% for 6 months. But again, there was that Bank of England base rate cut. And don't forget that Chase is a tracker rate. So that meant that the underlying rate that Chase was offering fell. So that actually means now you'll be getting 4.55% if you sign up for it now, or if you signed up for it in the last month or so. Obviously, it would have dropped down just a few weeks ago. And don't forget, the Bank of England, and there's always uncertainty here, what's going to happen and when, but the Bank of England could well reduce the base rate again this month when they meet in June. And the next one after that is in August. There's one in September. It's every 6 weeks they meet. So you could well find that although you're thinking, oh, great, I'm getting 4.55% now, I've got this bonus for that amount of time. If the base rate does fall, and there is an expectation that it could well fall a few more times this year, then obviously you'll be getting less. And I would say, as when Amelia takes you through the rates in a moment, you can beat 4.55% on easy access accounts. So why would you go for this? Well, I suppose if you like the convenience of having your current account and your savings all in one place, you don't want to sort of jump around. Not always the best thing to do, can be risk associated with that, but then you might want to go with that because it is still a decent rate. Not the best rate, but 4.55 is still a decent rate. And very quickly, a new account to tell you about. I personally wouldn't be looking at this right now because it's still really early. And it only offers 3.25%. So why are you telling me about 3.25%, Andy? That's no good, is it? Well, this is because this is a current account offering in-account interest rates. Most accounts do not give you anything at all. If they do, it's pretty pitiful. Crew gives you 3.1% right now, 3.15%, I should say. And that's one of the better ones out there. So if you do want to have a current account with a balance, because we always have some money in our current accounts, much as I say, put it off the separate higher paying accounts is the best thing to do. You can do that. There's a new account from LHV. You probably haven't even heard of them. They're a newish bank, brand new current account. You can get 3.25%. Again, wouldn't bother with it right now, but we'll keep you up to date as the current account improves. If there are other features that come with it that make it worth looking at, then this in-account interest could be pretty good. Now, you might already have seen this, but if you are a Nationwide customer, a part of their annual kind of give back to members, they are giving access to a 5% paying 18-month fix. Now, you can get this if you had any current account, savings account, or mortgage with Nationwide as of the 28th of May, 2025. You can get that. So it's a decent rate, 5%. Hard to get that right now, particularly on a fixed rate. That means 18 months' time, you'll be able to get the cash. We've got more information about this and the other perks that have come from this Nationwide offer, including £100 fairer share bonus and a potential £200 bank switching bonus elsewhere on the channel. Now, I've got one savings offer to tell you about before I hand over to Amelia. And this is from Raisin. Now, we've talked about Raisin before. This is a savings marketplace. Effectively, you can go into it, you can get an account with them, and then when you're there, you can open up a number of different savings accounts within that same app and different rates and move your money around. As long as they're obviously not fixed, you can move them around. So it's quite interesting from that point of view. Now, if you've never used them before, they have semi-regular welcome offers, and this is a particularly good one. This is £100 bonus you can get if, and there is obviously an if, always an if here, if you save £10,000 for 6 months. So obviously, decent amount of money that you need to be able to save, and you need to obviously not be able to touch it for that amount of time. But that can make it actually a really, really good return right now. So for example, their top 6-month fix right now is paying 4.4%. Now, if you put 10K in that, 6 months later, that £100 is added in. That gives you an effective rate of 6.4%. So from 4.4%, extra £100 works out an extra 2%. Obviously 6 months because it's not for a full 12 months. For that period, that's really, really good. If you want to lock away for 12 months, obviously that £100 only works out as an extra 1%, but you've got 4.37% there, giving you an effective 5.37%. But these rates do change. You obviously check what one is the best one at the time that you're going to apply for this. Now, I should say this ends at midday on the 16th of June, 2025 in terms of opening the account. So if you're interested to do that, make sure you do that. Read all the terms and conditions so you know exactly when you need to do it. Just say as well, you can only apply for that offer if you go via a specific link. We have one of those at becleverwithyourcash.com/savings. If you go direct to Raisin, you won't see this offer. Right, over to Amelia for the top rates.
So now we're going to go through the top rates for your savings in June 2025. But before we go, remember these are likely to change because they always do. And while we've definitely seen a slowing of rate cuts since the cut to the Bank of England base rate last month, you can't guarantee any of the rates I mentioned will stay put for long. We've also heard predictions that the next base rate announcement on the 19th of June could also see it cut again, although we don't know this for sure. If it is cut, though, we can expect a flurry of reductions to savings rates. But if you want to keep on top of any rate changes, head over to becleverwithyourcash.com/savings, which me and the team update twice a day and sometimes more. You'll be able to see the top 4, 5, or 6 providers for each type of account too, giving you more options, whereas today I'll just be mentioning the best 1 or 2. So let's start off then with my top current account linked pick, the Santander Edge Saver that pays 6% on balances up to £4,000. This includes a 2% bonus paid for 12 months. You need to get a Santander Edge current account to get this, which right now is offering an £180 switching bonus. Now, we mention this account a lot because the rate is so hard to beat. It's often featured in our monthly savings roundups, and you'll also see it in our weekly newsletter. Next, Nationwide's Flex Direct account is another option, paying 5% on balances up to £1,500. Again, it's got one of the top rates, although it's only paid on smaller balances. And not only is it just for 12 months, you can only get this the very first time you open the current account. If you're a Nationwide customer already, though, and you meet certain criteria, you could switch to this current account or one of the other Flex ones and get £200. If you've got a bigger balance or you want to take advantage of your ISA allowance, then here are some other accounts to consider. Let's look at the top easy access ISAs first because they pay higher rates. Although, be mindful, these have dropped significantly since last month. Just remember, most of them only offer these top rates to new customers. Until this morning, you could get 4.99%, but both Plum and Chip have cut their top rates. We'll keep updating over at becleverwithyourcash.com/savings, but we'd go for Trading 212 at 4.81%, including a bonus of 0.71% for a year, or Tembo at 4.8% without a bonus. I'd say either is a decent option if you're looking for an easy access account. Now, you might be wondering about Moneybox's ISA, which you may have seen pays a massive 5.46%. Well, beyond the headline rate is the fact that this includes a bonus of 1.51% for 3 months, and then it drops to 3.95%. So over the year, the two ISAs I've already mentioned work out better. If you've already used your ISA allowance, then you might want to have a look at easy access savings accounts. I've included both easy access and limited access here. Now, these pay a slightly lower rate than ISAs, but we've got an easy access savings account from Kahoot, which is the sister bank of Santander. So this pays a top rate of 5%, but only on balances up to £3,000. Still, it's a really good option for those with smaller sums. Next, Atom's Instant Saver Reward account pays 4.75%. Now, with this account, you'll need to bear in mind that the rate drops if you make a withdrawal. So you'll get the 4.75% every month you don't take any money out, but if you do, the rate will drop to 2.5% that month. And then back to an easy access without restrictions, Snoop's account pays 4.6% on up to £85,000. So if you've got a larger balance and would prefer access to your money whenever you like, this one would be the account to consider. There's also a decent notice account if you give around 3 months notice before getting your money. That's from Oak North, and it pays 4.74% on its 95-day notice account when you open it on savings platform Prosper. It's a good rate and definitely worth a look. You can see more options at becleverwithyourcash.com/savings. Now let's move on to fixed accounts. So if you're looking to lock your money away to give yourself some certainty over what you can earn on your cash, these are worth looking at. So first, let's look at non-ISAs because they pay higher rates. So we have got ISBank via Raisin, which offers 4.4% over 6 months. Plus, as Andy just explained, you'll get an extra £100 bonus when you deposit £10,000 or more. Then we've got Hampshire Trust Bank, which pays 4.45% for a year. Alternatively, National Bank of Egypt also has a 12-month fix that pays a slightly lower rate of 4.37% when you go via Raisin, but you could get an £100 bonus if you pay in £10,000, which brings the equivalent rate up to 5.37%. Another account Andy mentioned earlier, if you're a qualifying customer of Nationwide, you could get an 18-month bond that pays 5%, and if you're not, you could get 4.45% from Oxbury Bank over 18 months. Over 2 years, the top rate is 4.44% from Hampshire Trust Bank. 3 years, you've got 4.45% from Birmingham Bank. JN Bank has the top 4-year bond paying 4.4%, and Birmingham Bank pays 4.45% over 5 years. And next, fixed ISAs, we've got Virgin Money paying 4.27% over a year, Synergy Bank offering 4.17% over 2 years. For 3 years, UBL offers the same 4.17% rate. UBL also offers the top 4-year fix with a rate of 4% and the top 5-year bond paying 4.17%. Now, while ISAs don't necessarily offer the higher rates compared to fixed savings accounts, they're worth a look if you're considering a new ISA this tax year. And just quickly, if you're after a cash lifetime ISA, the top account pays 4.75% from Plum, including a 1.14% bonus for 12 months. And finally, regular savers, top of the charts, we've got Principality 7.5%, which is a very generous rate, but it's only for 6 months. So I'd probably look towards one of the other providers. So we've got First Direct and Co-op Bank that both pay 7% for 12 months. I'd probably go for the First Direct account first because the rate is locked in for 12 months, so you can get that guarantee. The same goes for the Club Lloyds account that's a fixed 6.25% for a year. With both of these providers, and is usually the case with regular savers, you also need to open a current account with the bank. And that's it, the June 2025 savings update. Remember, head to becleverwithyourcash.com/savings and becleverwithyourcash.com/ISAs for the top rates regularly updated by myself and the team. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.